Greetings, members one and all of the Salivation Nation. Well, it's Monday, and we're seeing, to some extent, the opposite of what occurred on Friday. Gold and silver prices see a solid rebound from last week's downdraft, and the Dow Jones Industrial Average and stocks are up too. So let's explore some of the reasons why. Yes, this comes to us from Kitco about the sort of a solid rebound, and I would be cautious about that wording because they're up. They're also not up by a whole lot. They didn't recover all of their losses, and by the way, the stock market didn't either. But gold and silver prices are sharply higher, or marginally higher, in early U.S. futures trading Monday on a corrective bounce following sharp losses posted late last week. The precious metals are seeing some perceived bargain hunting and safe haven demand. There's still keen risk aversion in the marketplace as the Mexican cerveza ailment flu scare continues to play out. April gold futures were last up $37.30 an ounce at $16.04. We'll take a look as those metal prices have pulled back a bit. March COMEX silver prices were last up about 31 cents at $16.77 an ounce. Global stock markets are mostly higher overnight, rebounding from last week's shellacking. In fact, let's pause and take a look here. We can see Dow Jones Industrial Average is up 1,293, almost 294 points, of over 5% increase, over 26,700 points now. And so it's interesting to see the movement in the markets, as it were, there. And while this outbreak continues to grip the global marketplace and is still causing trader and investor anxiety, the marketplace Monday morning is focusing on the likely stimulatory effects of central banks easing on the monetary policies in the days and weeks ahead. Fed Chairman Jerome Powell said Friday afternoon that the Federal Reserve stands ready to act if conditions warrant. There's some talk of a half-point rate cut. We'll see here. Other major central banks have just recently made similar comments. U.S. stock indexes are pointing towards mixed openings while the New York day session begins after hitting multi-month lows overnight. The Organization for Economic Cooperation and Development has issued a report saying that this particular ailment's outbreak will take a heavy toll on the global economy this year. And I want to also caution that, in China, there's a lot more recovered now than there are sick. So it's starting to slow down there. So I think that should be a word of cautious optimism there that, as now we're seeing cases come up in different areas, there are people recovering, a lot more of them that are dying from this. The think tank said the scale of economic slowdown cannot be estimated at this point, but said a best-case scenario would be the global growth being dinged by about 0.5% annually, which would put it at a 2.4% according to the OECD. It said its best-case scenario for China's economic growth in 2020 would be a 0.8% from the OECD's earlier projection of a 5.7% growth. Over the weekend, China Manufacturing Purchases Managers Index came in at a record low of 35.7% in February versus 50.0 in January. Expectations were for a reading of around 45. A reading below 50 suggests contraction in the sector. The global manufacturers' supply chains have been seriously disrupted as many factories in China, the world's second largest economy, are still closed. The yield on the benchmark of U.S. Treasury 10-year note has dropped to a record low of 1.031% overnight, while rebounding a bit as global stocks recovered. Gold and silver prices are sharply higher early Monday, but they have since pulled back a bit. Key outside markets today see NYMEX crude oil prices higher after hitting a 14-month low overnight and trading around $45.50 a barrel in early trading. The U.S. dollar index is trading solidly down today and hit a 4-week low. There's why gold and silver went up. Because the dollar index is suffering a bit and hit a month low and that's what's causing the markets for precious metal prices to go up, at least gold and silver, and why the stock market went up as well. U.S. economic data due for release Monday includes U.S. manufacturing PMI, the ISM manufacturing report on business construction spending, and the global manufacturing PMI. And here we can see gold and how it has played out. And, at the very beginning of the opening, we did see little blips of upwards movement. Then it went down, but then it went up. And, early in the morning, it did spike up a bit at its highs at around, 5, 6, 7 o'clock. Technically, the gold bulls still have the overall near-term technical advantage. However, a 3.5-month-old price uptrend on the daily chart is in jeopardy. A drop below last week's low of $1,564 would negate the price uptrend. Bull's next upside price objective is to produce a close in April futures above solid resistance at the February high of $1,691.70. Bear's next near-term downside price objective is pushing future prices below solid technical support at $1,564. First resistance is seen at today's high of 1612.10 and then at 1619.60. First support is seen at 1580 and then an overnight low of 1576.30. Very interesting indeed. And in silver, March silver future bears have the overall near-term advantage amid the recent steep downdraft. Silver bull's next upside price objective is closing prices above solid technical resistance at $18 an ounce. The next downside price breakout objective for the bears is closing prices below solid support at $16. First resistance is seen at the overnight high of $17.06 and then at $17.25. Next support is seen at last week's low of $16.40 and then at $16.25. So let's take a look and see exactly what these prices are doing right now. You can see gold is marginally up from yesterday's, after the big drop of the weekend. It did spike up and then went back down, but it's still higher. And silver as well. Actually, silver is performing the best of all the metals today in its day average here. It's up 9 cents, $16.82. Will we see $17 again soon? Who knows? We'll see. We shall see. And gold could hit that $1,600 level. Now, keep in mind, I sort of have my own little benchmark of a video I did several months ago entitled, $1,500 gold and $17 silver. Gold is still performing very well above that figure, still getting close to $1,600 again. And silver is underperforming and has not reached back to that, my little psychological floor, so to speak, at $17. So where will it go from here? Who knows? But don't get discouraged for those of you who are holding the metals. When you see prices drop like this, it happens from time to time, and sometimes there's outliers like Friday and like today, And precious metals are up today because of a weaker dollar, and they went down because of this massive selling. Very unusual, by the way. Usually don't see that. But what are the precious metals there for? Same thing they always are. They are an insurance policy. Think of them as an insurance policy. If you think of them in terms of that, and then you will understand that sometimes premiums go down if things are steady as you go. But even as such, whenever you pay your insurance, whether you have auto, home, or life, if you don't make any claims, you're still paying a premium on that insurance. So just as is the case, there is value in that insurance policy. So is the case with gold and silver. They're only going to go so low, if the prices go, let's say everything is fine, all the scares are gone, any kind of scare that's out there. Silver's going to only go down so low, gold is only going to go down so low. That's solid resistance, those supports. And that's the thing to keep in mind. Where are those supports? and how much lower can they go below that? They've broken through a couple of glass floors, so to speak, and they've popped through some glass ceilings too, although more so with gold than silver. But I think the thing to think about here is to look at a long-term chart for silver, especially silver, but also gold, and you can see where those lows are. We gonna, it's highly unlikely we're gonna see $12 silver again. It's highly unlikely we're going to see probably $13. And I think most everybody out there would agree we're not going to see $10 silver. And so that is why I always encourage people that for those who accumulate as pure stackers is to not only find the best deals you can for silver, for the lowest premiums over spot, but also buy when you can afford to do so to dollar cost average. Take advantage of dips. And understand that if you buy during a dip, it could dip even further. And that's happened to me. It's happened to many of us. That's just part of the nature of accumulating for an insurance policy as a safe haven asset, but also in investing too. That happens in investing all the time. And silver is one of those metals, especially, I think, that can be seen as a commodity just as much as it is money. But it does, I think, it still holds some of those principles as a safe haven and as an insurance policy. Gold especially. It's less volatile. It typically is more resilient in times like this. So there you have it. Platinum is down $4. Palladium is taking a pretty big hit again. 3% downward, is now below $2,600. $2,562 is where it is now. No movement on rhodium. So there you have it. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.